Well, folks, peak renewal pain is coming to Canada, and is population growth starting to fool people that we're actually growing? And the used Porsche Tracker breaks through that resistance points and hits a new high. All this and your questions on episode 151 of the Wise Old Owl Show. We are now approaching a very crucial time in the mortgage renewal game. We are about to hit peak renewal pain every month. There's almost 100,000 mortgages that are coming up for renewal. And for those that watch the show on a regular basis, it's very important that everybody understands that not less than 50%. At the end of this year, there will only be about 47% of Canadians that have renewed into a higher rate environment. So there's still a majority of Canadians that haven't seen the pain of higher interest rates. And to put things into perspective, I want to drill down on some stats. TD Bank has 9% of their mortgage book coming up for renewal by the end of August 2024. BNS, 13%, CIBC, 16%, BMO, 10%, and Royal Bank, 18%, okay? In the next 2 years, TD has 26% of their book maturing into these rates. Bank of Nova Scotia, 31%, CIBC, 39%, BMO, 23%, and Royal Bank over 40 at 41%. Now, to put things into perspective, okay, these are folks coming out of renewals where they're paying 2.79% up to maybe 3.49%, and they're now going to see fixed rates north of 6% in most cases, some pushing 7%. Okay, and for those that are in the variable game, in the last number of years, they saw their variables at 1.5%. You know, prime minus 95, prime minus 1 was 145 for the longest time. We're now looking at prime at 7.2, possibly another hike coming at the end of October or December. Bank of Canada still has a couple bullets in the gun. Who knows what they're going to be doing? What does this mean? What do these percentage numbers mean? I'm going to lay it out to you in an example of a $750,000 mortgage. If you were in a variable rate mortgage and you were basing your payment on 1.5%, when you started out this exercise, your interest cost was about $11,250. Okay? That's what the interest cost on $750,000 is at 1.5%. When you factor in at 6.9%, the interest cost on $750,000 is now $51,750. That's an increase in interest cost of $40,000, $40,500, folks. Okay? So for those folks in that static variable payment, which everybody knows I hate and was the stupidest product ever designed. And it's just frustrating to me that OSFI didn't can this product when they started seeing rates move up or when we saw rates hit the bottom, because it could only get into a bad situation as rates move up. This is going to come to roost. So out of the 5 lenders I mentioned earlier, only Scotiabank has a true variable product where payments went up every time prime went up. CIBC, BMO, TD, and Royal Bank all had static payments, which means that the payment calculated at the time the mortgage was taken at 1.5% is the payment they've been making. Only Royal Bank has prompted borrowers to at least meet the interest payment obligation and pay minimum $2 in principal reduction so they wouldn't go into a negative amortization. But as a couple news articles pointed out just in the last couple weeks, we have a flurry of business that is in negative amortizations. People owe more than what they started with. And we're starting to see this on credit bureaus. We're pulling credit bureaus for clients and we're seeing, the original balance $700, they now owe $708,000. That's not a good sign, folks. Terrible, terrible sign. because at time of renewal, OSFI is suggesting that all these lenders put people back on their original amortization, which means there's going to be a tremendous spike to payments when this renewal date comes. You know, a lot of people buy a home, it's their first home, and then they start a family. And, you know, with maternity leave as much as 18 months in length, some people are only on one income for a while. And a year and a half is a long time to just be on one income. You know, you buy a house with two incomes, no kids. You have a kid, you're down to one income, three mouths to feed. It is a significant amount of pressure to keep up your payment obligations and the additional costs of a child. You know, there's a recent study that indicated that to raise a child today in Canada is about 350 grand throughout their life. It's a lot of money. So, you know, we're definitely seeing folks struggling. We're seeing more and more signs, for sale signs go up in neighborhoods. I'm seeing a tremendous amount more than usual. And we're obviously seeing that as much as people think it's a buyer's market, buyers still can't afford to make payments. Okay, we're seeing the affordability of getting a mortgage just not there. Folks can't qualify. Okay, so there's something that's got to give. It's going to be tremendous pressure over the next 2, 3, 4 quarters, and rest assured that you better start looking at ways to cut expenses, look at additional ways to bring in income, whether it's renting out a basement, repurposing your property. You know, the City of Toronto allows up to 4 units on a property. Look into that. The City of Vaughan just approved last week the ability to increase one lot to have 4 units. So this can provide some relief with the basement apartment now that both the City of Vaughan and Toronto have this tool available to people to generate some additional income if they have the ability and the resources to do it. If you do need help in that regard, please reach out. We deal with this on an ongoing basis. Repurposing properties is something we specialize in. We have a number of projects on the go right now. We offer financing to this specific cohort of properties. And if you do need some insight, some information on how to go about it, feel free to reach out to us. We'll be happy to help you out. We've seen a tremendous growth in population over the last several years. And our Minister of Finance, or part-time Minister of Finance, always talks about how GDP continues to be strong for Canada, and we lead the G7 in GDP growth. Well, the reality is our GDP growth is driven by population growth, okay? And the productivity of our country is at record lows. It's a shit show, folks. It's not good, okay? The new driver of growth in this country is population, not productivity. That's a concern for long-term prospects for this country, and it's not a driver. Now, one thing I do want to point out is that the Q2 population growth number has been revised by Stats Canada. It's been revised by Stats Canada from 1.2 million to 1.05 million because the recent CIBC news story of how there may be 1 million people unaccounted for. Think about that. Think about that, folks. We have a government that doesn't know how much we're growing by. That should be a concern to everyone. So we have unaccounted people that have stayed past their expiry date on visas. So we have border services whose sole responsibility is to find out if you're bringing in cheeses or meat in this country and whether or not you visited a farm. But nobody's looking to see if these people are actually supposed to be here. So we got a problem. And one thing that is interesting is that over the last 8 quarters, our permanent resident, immigration of permanent residents has been pretty much flat, okay? It's been at about 420,000 over the last eight quarters. What's been going through the roof is non-permanent residents. We've increased it 71%, and has been that number of total population growth over the last 2 years, so since 2021. Now, what's interesting about non-permanent residents is as the economy slows, these people have a high risk of leaving. Okay, they're temporary residents. They're not here if things aren't good. Like, a lot of these folks are picking up the low-wage jobs, the entry-level positions, and if they start seeing that life is not as grand as what they thought it was, there's a risk of a flight to leave this country. And over the course of the last couple of years, that number is in the 750 range. And with the relations with India down the toilet, okay, we are seeing an exposure to these non-permanent residents. When you take into account 40% of them come from India, they're being told that this isn't the place to be. You know, all the promises of Canada is giving you a backdoor into residency is not as sold in their press clippings and in their marketing material. And with all the diplomats expelled and everything that's going down the toilet with this diplomacy, we could see a number of folks choosing not to come here and maybe opting to go to Australia, New Zealand, and other countries to get their education and whatnot. The other thing I want to point out is the used Porsche Tracker. That is a data point that I've been focusing on over a year now and reporting on a weekly basis, has pushed through that resistance point of 1,300. So last week we were sitting at 1,261. We hit a record of used Porsches for sale. And for those listening for the first time, I just want to point out that I have taken this data point of how many used Porsches are for sale on the Auto Trader website within a 100-kilometer radius of where I sit here in Dufferin, Orphis, just south of Yorkdale Mall, and try to get an understanding of whether the toys are starting to be sold. Now, since last week and through the Thanksgiving weekend, there must have been a flurry of people that have done some budgeting and realized, you know what? I'm getting rid of the Porsche. I'm getting rid of the toys. We hit 1,311 this week. That's a pop of 50 units that are up for sale. I looked at it this morning. It was about 1,301. This afternoon, it hit 1,311. So we're definitely trending upwards. And for those of you who want to track any other data points, you're welcome to do that, whether it's a G-Wagon, RVs, boats, whatever the case is. Check those, Facebook Marketplace, Kijiji, whatever, Craigslist, and you'll start seeing more and more toys for sales. People need to start liquidating some assets, coming up with some cash to make their payments. And that's one thing that I will say is that Canadians do make their mortgage payments. They'll let other things go by the wayside, but they do need a roof over their head once the winter hits, because it does get cold here. On that note, I got a writer for the Toronto Star reached out today. She showed me a Twitter post that indicated that power sales and foreclosures are on the way up in Treb, okay? And the chart indicated that we're about 95 power sales on Treb MLS listings in June, and we're now at about just under 150. I think it was about 145, 146. And it's been going up about 10% every month. Now, in all fairness, I don't think that's a significant number. The trend is not our friend, I will say that. But the reality is 150 power sales when we have a market as big as Toronto is still insignificant, okay? The default rates on mortgages is still negligible. We haven't seen the pain yet. And what I will say is Canadians and people in this market are more informed than ever, and they're probably going to get ahead of going into a power sale situation. They're probably going to sell it sooner than they have to. And they're pretty good with making sure they don't run into these situations where they lose control of selling. And a lot of education, information, knowledge is out there to help them through these situations, and most do indicate that, I foresee that this isn't going to go well, let's get out of Dodge and sell. So I don't think we're going to see a spike in foreclosures. I think people are going to let go of properties. They're going to bring in co-signers. They're going to bring in people on title to help them stay in their home. And you're going to see that transfer of wealth that is going to be passed down from one generation to the other, which at one point was deemed and expected to be a windfall. I think that it will now be the big bailout. Okay, this transition of wealth is going to help folks get through their sins and get rid of debt loads that they can't handle. And I think that is where we're headed. And I encourage everyone to do your budgeting, check out what you're spending your money on, understand what's coming in, and for the love of God, print out your statements. Print out the last 6 months credit card statements, bank statements. See what's coming out, what's going out, coming in, what's going out. Get rid of the shit you don't need, subscriptions, memberships, anything that is a want, get rid of, stick with only things that are needs. And start doing some price shopping, groceries and whatnot. Start being active in what you're spending money on, and really try to drill down and get through the next 12 to 18 months, which are going to be extremely, extremely difficult.